Sarah stared at her phone screen. $5,000 in red. Her hands shook as she hit sell all. The market had crashed 12% that morning, and every financial news channel screamed the same word: recession. 6 months later, those same stocks she panic sold were up 40%. Sarah wasn't stupid. She wasn't reckless. She was just human, playing a game she never understood. If she had read Matthew Cratter's A Beginner's Guide to the Stock Market, a book that's helped over 100,000 new investors, she would have known exactly what to do instead. Cratter, a 20-year Wall Street veteran who's worked at multiple hedge funds, wrote this book for one reason: to expose the truth about how the market really works, not how they want you to think it works. In this complete breakdown of all 13 chapters, I'm revealing every strategy, every secret, every proven technique that transforms confused beginners into confident investors. No fluff, no theory. Just the exact blueprint that's quietly creating millionaires who never check their portfolios. Right now, as you're watching this, you're probably thinking about your own Sarah moment. That time you bought high and sold low. That time fear made your decisions. That time you realized the market wasn't built for you. It was built to feed off you. What if I told you that wasn't an accident? What if the confusion, the fear, the overwhelming complexity, what if it's all by design? See, the stock market isn't complicated because it has to be. It's complicated because that's how they profit. Every flash of red, every expert prediction, every contradicting headline, it's noise, expensive noise. And while you're drowning in it, someone else is getting quietly, boringly, predictably rich. They're not smarter than you. They just know something you don't. They know the market isn't a casino. It's a machine. And once you understand how that machine works, you stop being its fuel and start being its partner. In the next hour, I'm going to show you exactly what Sarah wishes she knew. Not tips, not tricks, just truth. The kind of truth that turns panic into patience, confusion into clarity, and watchers into owners. Because here's what they don't want you to know. Building wealth is supposed to be boring, and boring works. Dad, just tell me what to buy. Jake's father sighed. 22 years old, first real paycheck, and his son wanted the cheat code. Tesla's up 30% this month, Jake continued, scrolling his phone, and this crypto guy on TikTok says, stop. His father's voice was firm. You're not investing, you're gambling. But Jake didn't listen. Within 6 months, he'd turned $10,000 into $4,000, chasing every trend, every tip, every can't-miss opportunity. Meanwhile, his younger sister Emma did something different, something boring. She put that same $10,000 into index funds and forgot about it. No checking, no trading, no drama. 5 years later, Jake's still chasing. Emma's account, it's worth $18,000 and growing. Here's what Jake represents: the perfect customer. Confused enough to keep playing, hopeful enough to keep losing, and too proud to admit the game is rigged. Wall Street doesn't need you to lose everything. That would end the game. They need you to lose just enough to keep coming back. Think about it. Why do they make it so complicated? Derivatives, options, futures, forex, technical analysis, fundamental analysis, candlestick patterns. It's overwhelming by design. Because confusion creates hesitation. Hesitation creates mistakes. And mistakes create profit for them. Right now, you might be thinking, but I'm smarter than Jake. I do my research. Good. But research without understanding is just educated gambling. You can know every metric, every ratio, every indicator, and still lose. Because the real edge isn't information, it's simplicity. It's the courage to be boring while everyone else is being brilliant. And that's exactly what we're about to unlock. The email arrived at 3:47 a.m. Dividend payment received, $127.43. Mike smiled, rolled over, and went back to sleep. Somewhere across town, his coworker Lisa was wide awake, staring at futures markets, trying to predict Monday's open. They started investing the same day, with the same amount. But Mike did something different. He stopped seeing ticker symbols and started seeing businesses. When Mike bought Apple stock, he didn't buy AAPL. He bought a piece of every iPhone sold, every app downloaded, every AirPod shipped. When he bought Coca-Cola, he didn't buy KO. He bought a sip of every Coke poured in every country on Earth. How's your portfolio? Lisa asked one day. Don't know, Mike shrugged. Haven't checked in months. Lisa couldn't understand. She checked hers hourly. But here's what she missed. Mike wasn't watching stocks. He was collecting businesses. Think about your daily life. You wake up, check your iPhone, Apple. Brush your teeth with Crest, Procter & Gamble. Grab a coffee, Starbucks. Drive to work, ExxonMobil. Order lunch, McDonald's. Pay with a card, Visa. Every single transaction, you're making someone money. The question is it you? When you own stocks, you flip the script. You're no longer just a consumer, you're a collector. Every purchase someone makes, you get a cut. Every subscription renewed, you profit. Every habit formed, you benefit. Warren Buffett once said, "I never attempt to make money on the stock market. I buy on the assumption that they could close the market the next day and not reopen it for 5 years." That's not wisdom, that's ownership. It's the difference between renting attention and buying assets, between watching wealth and building it. And once you make that shift, once you stop trading and start owning, something beautiful happens. The market stops being a casino and starts being your silent partner, working while you sleep, growing while you live, paying you to wait. Just a penny, the teacher held up the coin. Double it every day for 30 days. How much? The class laughed. Maybe a few hundred, Tommy guessed. 10,000? Sarah tried. The teacher smiled. 5,300,000 and change. The room went silent. That's compound interest, not magic. Just math. But it's the kind of math that builds empires and retires teachers. Right now, you're probably calculating your age, your savings, wondering if it's too late. Stop. Because while you're doing mental gymnastics, someone younger, poorer, and less educated than you just started. And in 20 years, they'll be free while you're still working. Here's what nobody tells you about compound interest. It's invisible until it's undeniable, like watching grass grow, then waking up in a jungle. The first year, nothing. The 5th year, barely noticeable. The 15th year, life-changing. Rachel learned this at 19. Waitressing job, community college, no trust fund. But every month, $200 went into her index fund. Automatic, mindless, boring. Her friends laughed. Live a little, they said, flashing new clothes, new cars, new debt. Rachel kept investing. By 29, her account hit $50,000. By 39, $200,000. By 49, when her friends were panicking about retirement, Rachel had $600,000. Not because she was lucky, because she understood the only formula that matters. Money, X time, X patience, X starts freedom. But here's the catch, and it's cruel. Compound interest rewards the young and punishes the impatient. Start at 20, and 100 month becomes $1 million. Start at 40, and you need 1,000 month for the same result. It's not fair, but fairness isn't the point. The point is this. Every day you wait costs more than money. It costs time. And time is the only asset you can't buy back. So, while everyone else is looking for the perfect moment, the perfect stock, the perfect strategy, you just need to start. Because compound interest doesn't care about perfect. It only cares about time, and time starts now. The hedge fund manager adjusted his tie. 3 monitors, 2 PhDs, 1 mission, beat the market, cost 2% annually plus 20% of profits. Performance, dead last. Again. Down the street, Jennifer the librarian checked her annual statement. 1 index fund, 0 stress. Performance. Beat 92% of the experts. Cost, 0. 4%. She laughed and went back to her book. This isn't a David and Goliath story. This is worse. This is an entire industry built on a lie. That complexity equals competence, that you need them, that you can't possibly understand. But the numbers don't lie. Over 20 years, 90% of actively managed funds lose to a simple index fund. Not sometimes, not barely, consistently, and embarrassingly. Why? It's because the market is smarter than any individual. It's millions of minds pricing everything, every second. Trying to outsmart it is like trying to predict which raindrop hits the ground first. Exhausting and pointless. But what about the 10% who win? You're thinking? Fair question. Here's the thing. They're different every decade. Last decade's genius is this decade's has been. Meanwhile, the index fund just exists. Owns everything. Charges almost nothing. No predictions, no ego, no drama, just ownership of human progress. Ronald Read understood this. Janitor, high school education, died worth $8 million. How? He bought quality stocks and index funds, held them, reinvested dividends, lived quietly while compound interest worked loudly. No day trading, no options, no crypto, no FOMO, just patience that paid millions. Right now, as you're watching this, someone is losing money trying to time the market. Someone else is paying huge fees for terrible returns. And someone, maybe you, is about to discover that the best strategy isn't sexy. It's simple. Set it, forget it. Get rich slowly, because in a world obsessed with beating the market, the real secret is joining it and letting time do what time does. Turn discipline into wealth, patience into power, and boring into beautiful. Section 5, the gambling trap. Tom's hands wouldn't stop shaking. Fourth coffee, third screen, second mortgage, first margin call. This time, he whispered, buying more. The stock dropped another 10%. Across the office, Sandra closed her laptop at 5 p.m. sharp. Her investments, she'd check them at Christmas. Maybe. 2 approaches, 2 outcomes. One ruins lives, one builds them. Here's the brutal truth. If you're checking your portfolio daily, you're not investing. You're gambling. And the house always wins. Think about it. What changes daily? Not business fundamentals, not compound interest, not your retirement timeline, just prices. Random, volatile, manipulated prices. You know what changes when you check constantly? Your emotions, your decisions, your returns. Because every dip becomes a disaster. Every rise, a reason to sell. Every headline, a heart attack. The market feeds on this. It's designed to trigger your fight or flight response. Red means danger, green means greed, and both mean you're playing their game. But I need to stay informed. No, you need to stay invested. There's a difference. One requires CNBC, the other requires discipline. Lisa learned this the hard way. Started with $50,000. Active trader, she called herself. Bought the dips. Sold the rips. Felt like a genius. Until she wasn't. 3 years later, $32,000, taxes, fees, stress, sleepless nights. And for what? Her sister Helen took the same $50,000, bought index funds, set up automatic investing, checked it twice a year. 3 years later, $71,000. No stress, no strategies, no screens, just growth. You know what the difference was? Lisa was playing the market. Helen was using it. One is entertainment, the other is wealth building. And if you need entertainment, go to Vegas. At least they give you free drinks. Because here's what every gambler learns too late. The excitement you feel trading, that's not success. That's adrenaline. And adrenaline doesn't compound. It just burns out, leaving you exhausted, broke, and wondering how boring Helen got so rich. The answer? She chose wealth over weather reports, growth over gambling, time over timing. And that choice, that's the one that matters. Margaret never worked past 55, not because she hit the lottery, because every 3 months, like clockwork, money appeared, dividend payments, from companies she'd never visited, for work she'd never done, legal, ethical, automatic. How? Her nephew asked. Magic, she smiled. But it wasn't magic, it was math. When you buy dividend stocks, you're not hoping for growth, you're buying income, real money, real deposits, real freedom. Every quarter. Forever. Think about your job. You work, you get paid. You stop, checks stop. Now imagine owning something that pays you whether you show up or not, whether you're sick or healthy, working or retired, alive or, well, your kids still get paid. That's dividends. Not a promise, a payment. Robert started with nothing. Mechanic, bad back, worried about retirement. But every paycheck, $300 went to dividend aristocrats, companies that had raised dividends for 25 plus years. Johnson & Johnson, Coca-Cola, Procter & Gamble, boring giants that print money. Year 1, $400 in dividends. Barely worth it, he thought, but he reinvested every penny. Year 5, $2,800. Year 10, $9,200. Year 20, $31,000. Annual, passive, growing. By year 25, his dividends exceeded his salary. He retired at 58, not rich by magazine standards, but free by any standard that matters. The market could crash, his brother warned. Robert laughed. So, my company still sells soap and soda. Dividends keep coming. And they did. Through 2008, through COVID, Through every crisis that had traders panicking, Robert's checks arrived. Because dividends aren't about stock prices, they're about business profits. And people always need toothpaste. Here's what's beautiful. You don't need millions to start. You need consistency. $100 buying dividend stocks becomes $105 next year. That $5 buys more shares. Those shares pay more dividends. The snowball rolls. While everyone else is praying for the next Amazon, you're collecting checks from the current Coca-Cola. They're chasing maybes. You're cashing certainties. And certainties compound. So ask yourself, do you want to bet on tomorrow's winner or get paid by today's champions? Because one strategy hopes, the other harvests. And harvest season? It comes 4 times a year. Section 7, the enemy in the mirror. The notification hit at 9:31 a.m. Markets in free fall. David's stomach dropped. Portfolio, 22%. His finger hovered over sell all. 20 years of investing, gone in a morning. He pressed it. 3 months later, the market recovered, then surged. David had locked in a $200,000 loss on paper that became a $1 million mistake in reality. He'll never retire now, not because the market failed, because his emotions won. This is how wealth dies, not in crashes, in reactions to crashes. Right now, you think you're different. I'd never panic sell, you say. I understand buy low, sell high. Sure, in theory, but theory doesn't scream at you in red numbers. Theory doesn't call you stupid at 3 a.m. Theory doesn't have your spouse asking, should we pull out? Here's the truth. Your brain evolved to survive tigers, not navigate markets. When you see red, your amygdala doesn't think buying opportunity. It thinks danger, fight, flight, or freeze. All wrong for investing. Sarah, remember her? Learned this lesson backwards. After panic selling in March 2020, she watched the market rocket back. Never again, she promised. She created rules. 1. Automate everything. 2. Delete the apps. 3. Check quarterly, maximum. The next crash, 2022, market down 25%. Sarah, she didn't even know. Her automation kept buying. Lower prices, more shares. When she finally checked, up 12% overall. Not because she was smart, because she was absent. But what if it keeps crashing? You're thinking. What if this time is different? It's not. It never is. In 234 years of American markets, every crash became a recovery. Every disaster, an opportunity. Every this time wasn't. The only question is, will you be around to benefit? Or will you be David, calculating what could have been? Because here's the savage truth. The market doesn't care about your feelings. It's a machine that transfers wealth from the impatient to the patient, from the emotional to the systematic, from the Davids to the Sarahs. Your greatest enemy isn't a crash. It's your reaction to it. Master that, and you don't just survive markets. You thrive because of them. The next crash is coming, not if, when. The question is, will you see disaster or discount? Because one mindset makes you poor, the other makes you rich. And the choice happens now, while everything's calm. Because in the storm, choice disappears. Only instinct remains. Make sure yours is trained to build, not burn. Section 8. The power of boring. What do you do for excitement? They always asked Marcus this at parties. Nothing, he'd say. They'd laugh, uncomfortable. Marcus would smile, because while they were living exciting lives, he was building an exciting future. No day trading, no crypto, no options. Just the same investment, same amount, same day. Every single month for 15 years. His friends, they had stories. That time they doubled their money on GameStop. That week they made $5K on Tesla. That amazing options trade. Marcus had one story. I invest in index funds. Boring. But his portfolio? $400,000. From a teacher's salary. Their stories? That's all they had. Stories. And debt. And stress. And the constant exhausting hunt for the next big score. You see, boring is a superpower in a world addicted to excitement. Because boring doesn't panic. Boring doesn't FOMO. Boring doesn't check. Boring just builds. But Marcus, his cousin, argued, you're missing out. Bitcoin, NFTs, AI stocks. Marcus nodded. Probably. Then he showed his returns. Steady, predictable, life-changing. Not month to month, decade to decade. His cousin's account? Won't talk about it. Because here's what nobody admits. Exciting loses money. Boring makes it. Every study proves it. The more you trade, the less you make. The more choices, the worse outcomes. The more activity, the less progress. It's paradox. It's frustrating. It's true. Think about the richest investors. Buffett holds forever. Bogle created index funds. Lynch, buy what you know. All boring. All billionaires. Now think about exciting investors. Where are they? Broke, stressed, starting over, again. One more trade. Always one more trade. Meanwhile, boring Marcus retired at 52. Not because he was brilliant, because he was disciplined. Not because he won big, because he won consistently. And consistently beats brilliantly. Every single time. So here's your choice. Do you want an exciting investment life and a boring retirement? Or a boring investment life and an exciting retirement? Because you can't have both. The market doesn't allow it. Time to choose. And if you choose boring, congratulations. You've already beaten 90% of investors. Now you just need to beat your own desire for drama. Do that. And wealth isn't a maybe. It's a certainty. Boring, beautiful certainty. Just this once, those 3 words cost Ben $50,000. Penny stock. Sure thing. His brother-in-law swore by it. 2 weeks later, worthless. Ben wasn't stupid. He'd read the books, knew the rules. But knowing and doing, different universes. Right now, you know what I'm about to say. Don't chase hot stocks. Don't buy under $10. Don't use margin. Don't short. Don't trade others' ideas. You know, but you'll still be tempted, because these aren't rules. They're electrical fences, and everyone touches them once. The lucky ones learn, the rest keep grabbing. Let me paint the picture. Penny stocks, Russian roulette with 5 bullets. Sure, someone survives. It's not you. That $2 stock heading to $20, it's heading to $0. With stops at dilution, delisting, and depression. But the pump and dump newsletter said, stop. They're paid to say that. You're the exit liquidity. Hot stocks at 52-week lows. Catching falling knives sounds dangerous because it is. It's down 70%. How much lower can it go? Another 100%. That's how. Ask Bed Bath & Beyond shareholders. Oh, wait, you can't. They're gone, shorting, infinite loss potential. Read that again. Infinite. You can lose more than you have. Joe Campbell shorted a Pharma Penny stock. Went to bed worth $37,000. Woke up owing $6,000. True story, tragic ending. Trading on margin, borrowing money to invest is like drinking to solve problems. Works temporarily, destroys eventually. That 2x leverage, it's 2x losses too, with interest, and margin calls at the worst possible time. Following others' tips, your barber mentions a stock, your Uber driver's getting rich on something, your gym buddy has inside information, they don't. They're the last to know. You're later than last. But what if I miss out? You're thinking. Good. Missing out on losses is called winning. The best trades are the ones you don't make. The money you don't lose is money that compounds. Here's the truth. Every beginner touches the fence. It's initiation. The question is, do you learn or do you keep reaching? Because the market has infinite fences and finite money. The survivors? They build wealth by avoiding destruction. Not exciting, not Instagram-worthy, but effective. And effective beats exciting when the bills come due. Always. These rules aren't suggestions. They're scar tissue from millions who learned the hard way. Respect them or join them. Your choice, your consequences, your future. Section 10, When Markets Scream, March 16th, 2020. Angela stared at her screen. Portfolio, 35%. The news screamed, pandemic, depression, sell everything. Her cursor hovered over the button. 20 years of savings. 1 click away from gone. She closed the laptop, went for a walk, made a decision that would define her financial life. Nothing. By December, her portfolio hit all-time highs. Not because she was smart, because she was still. While millions panicked, Angela remembered. Every crash in history became a recovery. Every single one. 1929, 1987, 2000, 2008. All looked like the end. None were. But this time, no, stop. It's never different. The reasons change, the result doesn't. Markets breathe, in, out, crash, recover. It's not a bug, it's the feature. Think about 2008. Financial system collapsing, banks failing. Everyone's certain this is it, the end. Except it wasn't. The market doubled in 5 years. Those who sold at the bottom, they're still working. Those who held, retired. Those who bought more, rich. Easy to say now, you're thinking. You're right. It's never easy in the moment. That's why you need rules before the storm. First, expect crashes, not fear them. Expect. They're as certain as sunrise, as predictable as rain. Every 3-5 years minimum, plan for them. Second, automate everything. Can't panic sell what you don't control. Set it, forget it. Let the system protect you from yourself. Third, reframe the narrative. Crashes aren't disasters, they're sales. Everything you want to own, 30% off. Black Friday for stocks. Would you run from that? Fourth, zoom out. Daily charts scream, decade charts whisper. And they whisper the same thing. This too shall pass. It always does. Marcus from earlier, he lived through 5 crashes, never sold. Each one made him richer, not during, after. Because he understood, wealth isn't built in the good times. It's built by surviving the bad. Right now, markets are calm. You feel safe. This is when you build your crash plan. Because when blood runs in the streets, plans disappear. Only instincts remain. Train them now. The next crash is coming. Not to destroy you, to test you, to transfer wealth from the weak to the willing, from the panicked to the prepared. Which side will you be on? Because that choice, that single choice in the moment of maximum fear, determines whether you build wealth or watch others build it from your ruins. Prepare now, thank yourself later. The crash doesn't care if you're ready, but your future does. Which app should I use? Jessica asked. Wrong question. The app doesn't matter, the system does. But since you're asking, let me show you what actually matters. 3 tools. That's it. More is procrastination disguised as preparation. First, your brokerage account. Think of it as a doorway. Nothing fancy needed. Fidelity, Vanguard, Schwab, even Robinhood. Just need 0 commissions, automatic investing, dividend reinvestment. That's it. Not complicated. David spent 3 months researching the perfect broker. His friend Amy just opened Vanguard and started. 3 months later, David's still researching. Amy's up 500. Perfect is the enemy of profitable. Second, order types. 2 choices. Market orders. Buy now at whatever price. Good for liquid stocks. Dangerous for everything else. Limit orders. Buy only at this price or better. Protects you from surprises. Always used for volatile stocks. But what about stop losses and trailing stops and stop? You're overcomplicating. Buy with limits. Hold forever. Sell never. That's 90% of investing success. Third, basic research. Not technical analysis, not chart patterns. Just answer. What does this company do? How does it make money? Would I use their products? Can my grandma understand it? If any answer is no, pass. Thousands of other stocks. Peter Lynch said, never invest in any idea you can't illustrate with a crayon. He managed $14 billion successfully. The crayon rule works. That's too simple, you're thinking. Exactly. Simple works. Complex sells courses. Here's your homework. This week, open an account. Don't research more. Don't wait for perfect. Just start. Next week, buy 1 share of anything. SPY, VTI, Apple. Doesn't matter. Just buy. Feel the process. Demystify it. Week 3, set up automatic investing. $50, $500. Whatever you can. Same day each month. Forever. That's it. You're an investor now. Not when you're ready. Now. Because tools without action are just expensive toys. And the best tool? It's time, which starts the moment you stop planning and start doing. The market's open. Your future's waiting. What are you waiting for? Permission? You just got it. Perfect conditions? They don't exist. More knowledge? You have enough. The only thing between you and wealth is the space between knowing and doing. Cross it today. Your future self is watching. Make them proud. Give me something I can actually do. Fair. Here it is. 3 steps, not 30, not 300, 3. If you do nothing else but these 3 things for the next 20 years, you'll build more wealth than 90% of Americans. Ready? Step 1. Automate everything. Pick a number, $100, $500, $1,000. Whatever you won't miss. Set it to automatically invest in a total market index fund. Same day, every month, forever. No decisions, no emotions, no excuses. Just wealth building on autopilot. Tom did this in 2007, forgot about it, literally. Changed jobs, moved twice, had kids, remembered in 2019. Balance $127,000. From $250 a month, he never missed. That's the power of forgetting. Step 2. Reinvest every penny. Those dividends? Don't spend them. Don't even see them. Auto reinvest. Every quarter, your money makes money. That money makes money. The machine feeds itself. Rebecca started with $10,000. Never added another cent. Just reinvested dividends. 30 years later, $89,000. From doing absolutely nothing but not interrupting success. Step 3. Never stop. This is where everyone fails. Market crashes, keep investing, lose your job, reduce, don't stop. Experts predicting doom, who cares? Keep investing. The plan doesn't care about headlines, neither should you. But what if? No. There is no what if. There's only the plan. Markets crash? Great. You're buying more for less. Markets soar? Great. Your wealth is growing. Markets flat? Great. Dividends still paying. There's no scenario where consistent investing loses. None. Zero. It's mathematical impossibility, given enough time. And time is all you need. Not genius, not luck, not perfect timing. Just time and the discipline to not interrupt success. Maria started at 23. Minimum wage, $50 a month into index funds. Never increased it, never touched it, never worried about it. Retired at 60 with $380,000. From $50 a month, the cost of streaming services, that's your blueprint, that's your fortune. Hidden in plain sight, wrapped in simplicity, delivered through discipline. Most will read this and think, too simple. There must be more. There isn't. That's the joke. The cosmic joke of wealth building. Everyone's looking for secrets when the answer is screaming, just keep investing. Same amount, same fund, same discipline, different life. Start today. Not tomorrow, not when I have more money, not after I research more. Today. Because every day you wait costs more than money. It costs compound interest. And compound interest doesn't forgive delay. Your 3 steps, your new life, your choice. What's it gonna be? Remember Sarah from the beginning? Staring at her phone, shaking, selling everything. That was you. Maybe not literally, but spiritually. We all start there, confused, reactive, afraid, servants to the market's moods. But something changed. Through these pages, these examples, these truths, you've transformed. You don't see chaos anymore. You see opportunity. You don't feel fear. You feel patient power. The market didn't change. You did. Think about who you were an hour ago. That person would have chased hot stocks. This person buys index funds. That person would have panic sold. This person buys the dip. That person needed excitement. This person builds wealth. You've crossed a bridge few ever find, from consumer to owner, from gambler to investor, from hoping to building. And now you see it everywhere. The friends still chasing, the news still screaming, the experts still lying. But their noise can't touch you, because you know something they don't. Wealth isn't built in public. It's built in private. In the quiet moments when you choose discipline over drama. In the boring months when you invest anyway. In the crashes when you see opportunity. You're not the same person who started this video. That person was looking for secrets. This person knows there aren't any. Just principles, time, discipline, and the beautiful, boring path to freedom. Look at your hands. They don't shake anymore when markets drop. Your heart doesn't race at red numbers. Your future doesn't depend on tomorrow's prices. You've become something rare, an investor, not a trader, not a gambler, an investor. Someone who understands that wealth is not an event. It's a process, not a sprint, a marathon, not luck, choice. Your friends won't understand. The market crashed 20%. They'll panic. Great, you'll think. Sale prices. They'll chase Bitcoin. You'll buy businesses. They'll trade stories. You'll build wealth. And in 20 years, when they're still starting over, you'll be free. Not because you were smarter, because you were willing to be bored, to be patient, to trust the process when everyone else trusted the noise. This is who you are now, Own it. Embrace it. Let it guide every financial decision from this moment forward. Because the person you've become, that person doesn't hope for wealth. They build it. One boring, beautiful investment at a time. Welcome to the other side, where panic becomes patience, where confusion becomes clarity, where watching becomes owning. You made it. Now, the real journey begins, and it starts with one simple action, your first step to freedom. You've just discovered what most people die without knowing. The market isn't your enemy, complexity isn't required, and boring builds empires. Right now, in this moment, you have two choices. Close this video and go back to hoping, or take one action that changes everything. Here's what I need you to do. Comment below with your commitment, not your goals, not your dreams, your first action. Opening my Vanguard account today. Setting up $200 monthly auto invest. Buying my first index fund share. Write it, own it, do it. Because written commitments become real actions, and real actions compound into real wealth. If this video gave you clarity in a world of confusion, if it showed you the path when everyone else is selling you mazes, hit subscribe. Share this with someone still trapped in the casino, still checking daily, still confusing movement with progress. They need what you just learned. And finally, if you want the step-by-step blueprint, which accounts to open, which funds to buy, how to automate everything, check the free guide below. Everything you need to start, nothing you don't. Because remember, Sarah from the beginning, shaking hands, panic selling, losing everything, that never has to be you again. You know better now. You know that wealth isn't built in storms. It's built in the quiet years between them. You know that excitement is expensive and boring is profitable. You know that the market isn't a casino. It's a wealth machine, and you just learned how to operate it. The game isn't rigged. You just weren't playing the right one. Now you are. And now, nothing can stop you but yourself. Your new life starts with your next decision. Make it count. The market's waiting. Your future's calling. And compound interest? It starts counting the second you begin. That second is now. Welcome to the 10%, the patient, the disciplined, the free. You've earned your place. Now claim it.